Actually, we'll just move locations now. All right. Let's pause or get out of that for now. So lesson 12. Lesson 12. We're going to actually play something in the background from our phone as we are going into this lesson, just so we have something in the background playing. 1 second here. Let's play something that kind of relates to this when it comes to finances specifically. So I think this one here alone will be perfect for this lesson. We're going to go ahead and plug my phone in so it does not die on us. And then we're going to play this. Now this lesson is going to be about hour and a half. Okay. Now we're going to tie into some massive things in this lesson, and then we're going to go into the actual charts themselves and show you really what we're talking about. Okay. So give me a second. I'm going to start this lesson here.
With lesson number 6 from the Lead the Field seminar, Seed for Achievement. Earl Nightingale began this lesson by saying, "It is our intention that each of these messages be built upon a major principle, the proper use of which will result automatically in more successful living. In this one, I'm going to give you a principle which will substantially help you attain your personal and business
All
goals.
Right.
And even
Make
more
sure
important,
that's saying it.
will result in your achieving a peace of mind you may never before have experienced. And since it's the kind of principle it is, it would be well to get the whole family together for this message, particularly the children. Again, it seems that at least 95% of the people, maybe more, don't seem to know about this, at least not fully.
There
So
we
the
go.
person who does know has an enormous advantage. The seed for achievement is truth. Not necessarily the kind of truth we hear so much about, although that's important.
I'm going to turn it down just a tiny bit so we can have a talk. Let it play in the background.
Truth means honesty.
First of all, get my phone untangled from this thing.
Was perhaps best put by Shakespeare when in Hamlet he has Polonius say, "And to thine own self be true, and it must follow the night the day. Thou canst not say false to any man." The kind of truth I want to talk to you about is inner truth. Truth to yourself. The information that Earl just shared with us.
All right, lesson 12.
Is so perfect, and yet, unfortunately, as he mentioned,
and remember, if you want any of these audios that we are playing throughout the lessons, just reach out to me afterwards and we can go ahead and give that to you. Okay. So lesson 12, understanding the financial markets. Okay. So the last couple lessons, we were talking about setting up your trading account and really doing that daily analysis to help you out with training your eyes. Okay. So in this lesson, we're going to actually be covering a few topics, and it'll allow more understanding into the concepts of these, of the market analysis. Okay. And this is what we're going to cover. We're going to cover moving averages, how to dictate the movements of the market. We're going to cover expansions and extractions. We're going to also cover some Fib retracements and pullbacks within the retracements. We're going to also cover important retracement levels. Okay, this is something that really helped me in my trading journey to where I am today. Anyways, understanding these important retracement levels, right, is really going to help you skyrocket your skill set. So we also have important extension levels as well that we're going to tie into. Okay. So pay close attention and gather your notes for this week's chart analysis. Okay. Make sure when you are on TradingView, you're not complicating things for yourself. I myself went ahead and actually did complicate things in the beginning. It happens, right? We're inexperienced. It's something that we do to maneuver and try to figure things out, right? Is we do things differently, and maybe not so much to what our coach is saying or our mentor is telling us to do, right? We want to figure it out ourselves. That's how we naturally respond or react to things. Especially when we're inexperienced within these markets. That's exactly what happens. Okay. So remember to box in the market if need be. Okay. To find your setups, box them in, and I'll show you in the live market exactly what we're talking about. Okay. I need some water. I'll show you as we dive into expansions and contractions in this area of the lesson. But we'll actually show you specifically when we go into the market analysis and show you what we're talking about in this lesson. Because when we can teach something, you know, we learn in 3 different ways. We can learn either visually, or we learn literally, like through reading or writing, right? Or we learn through listening, right? There's those 3 ways that we learn how to do things. So there's also a quiz online to show you which way you learn better. Okay. So in Forex, or understanding these markets, it's best to just put all 3 at play if you can, right? Listen, read and write, and also put the action forward to understanding the methods or the things that we're teaching you in these courses. Okay. Oh, excuse me. So remember, always remember that we have the 4 phases. Okay. Remember where you are when you're looking at the market. You could be in the accumulation phase and try to be looking for a sell, right? You could be in the advancing stage looking to decline or go higher, right? You don't know until you start doing that daily analysis and just understand exactly where you are. Like if you look at this picture here, this accumulation stage, it tells you range after a 6-month decline, right? So it's been declining for so long that it has to accumulate in order to advance, right? It's also a long period of consolidation, right? It's a longer period of consolidation. And the 200 MA is flattening, all right? So it's just going straight across, okay? That's how you can tell if you're in accumulation phase, right? And if we already know what to look for in here and the declining. So let's just figure out these accumulation and distribution. So the distribution is almost like the same as the accumulation, but it's ranging after a 6-month advance. Phew. Oh, I got dust in this area of the room. Jeez. And then we have a longer period of consolidation, right? Just like the accumulation phase. And our 200 is flattening out again. Okay, it's flattening out. Now, understanding the areas that you're in is really going to help you understand your history and understand your predictions. Okay, because when we know where we are, we know where we've been, right? And we know where we're going. So understand exactly where you are, and you'll become the master that is needed to learn the skill set. Okay. Once you've discovered what phase of the market you are in, then you can start looking at price action strategies and our timing of the market. Okay. We'll talk more about timing in the next lessons to come. Timing is just a little bit more into this, and we'll go into it next lesson specifically. So, which we'll be covering moving into the lessons to come, right? These market phases are extremely important to know, especially the distribution and the accumulation phases. And that's why we were talking about them and giving you that basic understanding to understand where you are specifically, if you're in the accumulation or if you're in the distribution. Okay. So we covered a little bit about moving averages, but However, we did not cover a few key points when using these MAs within your analysis. We know that the 20 and 50 MAs are faster moving averages, and we know that the 200 and the 128 are slower. However, we do not know that choosing the right moving averages adds reliability to all technically based day trading strategies. Okay. So when we're adding these moving averages, it adds reliability. So it strengthens your trade setup. Okay. So these MAs are highly important to learn when setting up your trades accurately. Okay. While poor or misaligned settings undermine otherwise profitable approaches. So when you don't have the familiarization of your MAs and where the candlesticks line up with poor or misaligned settings, it'll undermine your profitable approaches, right? So therefore you could lose your trade, even though you've have so many confirmations going in your way. You can still lose your trade by not having aligned settings. Okay, so we have to understand these MAs are very important. In most cases, identical settings will work in all short-term time frames. Okay, allowing the trader to make needed adjustments through the chart lengths alone. Okay, so it's going to allow you to give those adjustments, place your SRTs or your horizontal lines, where whatever you're using for the tools on TradingView. It's going to allow you to really give that adjustment to your trade setup, right? So here's some key points about some of the faster moving MAs. Moving averages add reliability, like I said, to all technically based day trading strategies. And in most cases, identical settings will work in all short-term time frames. 5, 8, and 13 bar simple moving averages. So it's just the 5, the 8, and the 13 simple moving averages, which is the SMAs. It's just a little bit different. Offer perfect inputs for day traders seeking an edge in trading the market from both long and short sides. Okay, so these MAs here, these simple moving averages, are the best to start out when you're working with anything. Okay, the 20 and the 50 can be added to these, but if you go by these, it's telling you specifically here that it offers perfect input for your day trading. Okay, it offers both long and shorts, perfect inputs for seeking that edge. Okay, so these MAs, like I said, I'm going to keep mentioning it, are very important to understand when moving along through your analysis. Okay, moving averages work as micro filters as well. Okay, telling the observant trader the best times to stand aside and wait for more favorable conditions. Okay, so it's going to give you that filter, that edge, giving you, okay, well, there's signs, there's also stories that the candlesticks tell you here, right? And with your MAs included, it's going to give you that quick edge. Okay, you need to get out or place your trade here because this is more a favorable condition. You're not going to get stuck in consolidation very long, right? So that is what it's saying here. It's going to give you the best times to either not trade in that market or when to actually get in and capitalize and make a profit. Okay, that's what it's saying it's going to do for you. So here I added some photos. I'm just going to take another quick sip of water. In the first image here, it shows the cross of the 200 MA and the 50 MA. Okay, and we'll explain a little bit about this after. In the second image, geez, in the second image, shows us price action, reversals, as well as continuation patterns, the crossover of the moving averages, and some entry points. So there's a lot going on in the second photo, right? Just trying to clear my throat. For some reason, every Saturday when I'm talking lots, I have to clear my throat more for some reason. I have no idea. A little more drier or something. Anyways, so this is what this 20 and this 50 cross means. Okay, we have a golden cross or a death cross, and I'm going to explain. Okay, so the golden cross occurs when a short-term moving average crosses over a major long-term moving average to the upside. Okay, and this is interpreted by analysts and traders as a signaling a definite upward turn in the market. Okay, so when the 200 and the 50 MA cross and we're in an upward trending market, it's a confirmation telling you, if you're not in this market, to get into this market because we're trending upwards and we're going to continue. Okay, it's basically telling you get in. It's definite. Okay, now a death cross is the opposite. The death cross is when a short-term MA crosses over a long-term MA to the downside. Okay, and it is interpreted by analysts and traders as signaling a definite downward turn in the market. Okay, so that means that this market is going down. Okay, we're shorting this market to the bottom. It's going, it's gone. Big drops is what my leader would say, right? Big drops. Okay, so a death cross is a sell and a golden cross is a buy. Okay, and it's definite. And here's a couple pictures here as I show you of these crosses here. So we have the cross here, as you can see, right? Confirming. See, if we missed it here, of course, we missed a lot of this market, but as you can see, it still continued up here. So if we caught the cross, we could have got in and still made a profit here, right? Still a decent profit. This one here, if we caught this one, as you can see, the cross happened right here and all the way down to the downside, right? These crosses happen quite a bit. And like I said, they are a definite signal to get in this market. Okay, they are a definite signal to get into this market. So that's about MAs. Let's go into expansions and contractions. Okay, just like we have the 4 phases, we also have 2 trending phases. Okay, and what I mean by trending phases, that means we have an upward trend or a downward trend, right? They're called something else. So they are called expansions and contractions when the market is trending down or to the upside. An expansion is found in the the ascending and declining areas, okay, of the 4 phases of the market. Expansions occur when you see impulse waves to the highs and lows of the market, okay? Within this expansion, we can also find our wave analysis for corrections and all other Elliott waves, okay? These expansions will be more understood by further analysis into the market when we dive into a live market. And I'll show you how these expansions work, how these contractions work. It's very simple. And boxing it in helps you find them more, right? It makes it simple for you guys. So contractions can be found in all areas of the market because the market corrects itself all the time. Contractions also can be called pullbacks and or counter trends, okay? However, when you are in a phase that is leading to a pullback, the market will give you a sign to either exit the current trend and buy or sell back in for the retracement, okay? Understand some candlestick analysis here will help with probability, okay? Candlestick analysis will help with probability. Now, if you remember correctly from last lesson, we said if you are a beginner, do not trade the corrections / pullbacks and or counter trends, okay? If you're beginning, do not trade them. So here's the Forex Masters pattern here. It's a 3 market phase. It includes, that's why it's the master pattern, because it includes all 3 phases of the market except for one, okay, and that's the declining. So as you can see here, we have our contraction, then we have an expansion, then we have another expansion with a mini cycle of retracements. You can see here. You can take profit here. It says profit taking, profit take and enter again, basically is what we would do there. And then you get out up here before the market goes into its distribution, right? So in this image, you will see the Forex master pattern, which includes everything we've been covering thus far. 3 out of the 4 phases, the expansion and contractions and mini retracements, which we will be diving into next as we go further into this lesson. Let's dive into one of my favorites. Here we go. I love this part of this lesson. So Fib retracements, what are they and how do I use them? Fib retracements are corrections and pullbacks to certain levels within these large markets. You can use a tool on TradingView, which is called Fib Retracement. Simple tool. This tool combined with your SRTs can help with analysis of dictating the markets of the movements of these markets. Your MAs will also help here, okay? When looking for retracements in these markets, you're looking for key level rejections and or pullbacks to also these key levels. This can set up your probability in your day trading. And there are many levels to look for, but here are the most important ones to watch for the pullback and or rejections off of. So here we have 6 different fibs that I've written in here. So the 3 main ones that you're looking for are the fib level 618, the fib level 3.82, and the fib level 0.50. Okay, these 3 levels, you're well on your way if you start to understand where these retracements set up. Okay, you're well on your way. Now, however, we do also have our major rejection levels. Okay, but my own experience with these, the market comes to there not as frequently as it does these other fib levels. Okay, so the other ones, though, the major rejections are the fib level 1.618, 2.618, and 3.618. Okay, these are just some of the basics that have helped me along my way in this trading occupation. Daily practices will bring you to advanced techniques. Training your eyes for price patterns, corrections, SRTs, fib price retracements, and the understanding of MAs will bring mastery of the basics of trading. Okay, so train your eyes of all this and you'll become the master of the basics. Okay, this is just basics. Let's go and have a look at the market. Okay, and I'm going to end this lesson. Okay, as you know, that I like to look at Bitcoin, right? And don't mind this, I have a whole whack load of stuff here lined up. I can always go ahead and redraw it in here. So we're on the 4 hour. I'm going to come up to the day. Okay, so we have a better look at what's going on here now, right? Now I have my 200 at its thickest and I have my 50 at its thickest. As you can see, we had the 20 cross the 50 almost here. This 200 is crossing another shorter moving average, which is the 128. Okay, so we're looking for this 50 and this 200 to cross to confirm this uptrend. Okay, that's what we're looking for. So basically, we're going to go ahead and do this here. I'm going to also bring this in here. Okay. Now, as you can see from this spot here, we are in a downwards trend. So what I'm going to do is I'm just going to take my 2.0 and I'm going to bring it to the bottom of that. So we have this level here, right? And then I'm going to grab my rectangle. And I'm just going to bring it across. Okay. It can only return to you what you first give to too much. And what do you have to give? You have real wealth. There we go. All right. So the reason why I did that is because we can kind of see the separation of everything, right? You can see what's going on specifically within this market. So now let's cover some crosses here. As you can see here, look, we had a cross of the 200 and the 50 right here, and the market went down. So that is a perfect indication telling us to get it. Let's see how big that that movement was. If we had got in here when it crossed and took that trade, that would have been 858 pips. 858 pips.
uneasy, worried, or depressed. They're a part of life. Should they come, let me suggest that you remember
Yeah.
quotation,
We don't
which
count
has
the
helped
last
me
two.
and a lot of
Don't
other
count the
people
last two.
overcome some rough spots.
All
It's
right,
like
let's look for
being
another
born,
example here.
and it goes like
We're just
this.
looking for the MAs.
Do your work. Not
Probably
just
one
your
right
work,
here for a
but
cross.
work with a lavish say.
Over
And
here
little
somewhere.
more, which is worth all the rest.
We had the cross
That
right
is
here.
surgeon must do.
You were in for a while before she climbed up,
Put your heart into it.
but
The sky will clear.
that is a nice
And then
climb.
you'll
If you
be
look,
born in
let's
this
bring this
new
down.
era of life. This quote by Dean Briggs is one of my favorites.
Bring that
I've
in.
liked it from the first moment
Okay.
I heard it, and many years ago
Now,
admitted it
we
to
got to
memory.
see that cross here
There have
still.
been numerous
Okay, so the
times
cross is right
when
here.
I'm in the process of
Okay,
forming
so
a
we
new
know
habit,
roughly where it
and my
is.
old paradigm
Let's
is
calculate
fighting
that.
feverishly to get me to
We'll
forget
bring
it.
this in some more so
I
we
would
can
have
get the
such
top
thoughts
of
as
that.
it's unnecessary.
So that cross is
Forget it,
right
let it
here.
go, start it tomorrow.
Let's
It was at those times this quote comes back to my mind. I mentally and sometimes verbally repeat it.
look at
My
that.
attitude would shape
Had you
my
got in
behavior,
here
bring
where that cross
something better
happened,
to my work. A little more for the last
59,
You are now at the halfway point in this lead the field method.
59,000
Specific hour
and 87 pips.
refer to it as your creative study hour. Or
When did that
moments
happen?
for
That climb
brainstorming.
happened
Give it a title and then make it a part of your life.
May
You may,
10th
on occasion,
of
invite your
2019.
listeners to join you in
So
this
basically a little over 2 years ago.
brainstorm. This
That's
hour
when that
is set
climb
aside
happened.
for research and development. Its sole purpose
Wow.
is to enable and
But look at
inspire
this.
you to bring
Like,
more of your rich resources to
Look what's
the
going
surface.
on here right now.
I've
If you
often
look,
recommended to people that
we have a
they
left
get
shoulder,
6 o'clock coffee. That's when
head,
you are up bright and early, rested, and your mind is clear.
and we
You're
might
not
have a
having
right
waves of daily
shoulder right
activity
here to
pressed
get
upon
in to
your
take this
mind.
market
You feel
down.
fresh and ready to roll. Keep in mind,
Now,
if you've not already
we'll get
started
into
of setting 1
head
hour
and
aside
shoulder
for
patterns
research
in
and
the
development,
next lessons to
then your
come.
paradigm, which is
But that is the
your
number one
research
reversal pattern in these markets is the head and shoulder pattern.
on a continuous basis with this new productive behavior
So
pattern.
let's go back down to the day now that we showed you that, or the
I would
1
suggest
hour.
that you write out your commitment. Put on there that
The
my
1 hour.
signature is my
And I
commitment
want
to
to
allocate the following
point out
hours
some fib stuff here.
every day for my own research and development. I understand my old conditioning will attempt to prevent me from honoring this commitment.
Maybe I have to go to the 4 hour
I
because
have
you can't
made
see
a
the whole thing.
decision that is irrevocable. I am doing this. Sign it and date
Yeah,
it.
that'll work.
And I might even
Perfect.
take it a
Okay.
step further.
So
Put
let's
it on
just
a
come
card,
down like
keep it in your
this.
pocket, and read it as often as
And
possible.
so let's draw on our fibs.
You'll get the idea of a commitment
So our
sometimes
fibs
the
are going to
inventory
go
is
in like
3%
this.
as much as mine. And I
I'm gonna use this. This is our tool here. Because this is in a downwards trend, we're going to come from high to low. Right there, right? Now, as you can see, the price is sitting at one of our major important zones, one of our major lines. So we're going to highlight that area just to, you can also see it's sitting right above that too. Right? We'll color that a different color. Let's go yellow. Right? So this is our 50, right? So, and then we have our 618 up here, right? So as we see this 382, I'll give you guys a bit of a secret. It is the second best entry into this market, okay? It is the second best entry into these markets, okay? Now, I'm going to give you a quick analysis of what I think is going to happen here. Up here. Now, we might see some divergence pop up on this, but I don't think it will. Just the way it is sitting, it might though. right? So, and we'll talk about divergence a little bit later on in the next lesson or two. So because she's sitting at the 382, we're going to wait for this close out of this candle in 5 minutes. Okay. This candle close out in 5 minutes, letting us know which way that this is going to really go, because the next candle, as you can see, we have a cross here, right? We have that cross here on the 4 hour. So this really tells us that this is going to continue up, right? So it's more than likely going to break out with the next candle, and then we'll see a retest at the 382 to continue up to possibly the 618, right? Even at 50K. That's what I believe Bitcoin will probably do based off of the analysis that I see here, right? So this is just price that we've added, right? This is Fib price retracement, okay? So if we were to add the time in here, we would get an actual identical spot to really take that trade up. Now, I have not taught anything about time zones yet. Now, we will talk more about that in, like I said, the next lesson. But I'm going to show you just where to place them today, okay? And you can practice a little bit along your own as well. But you take your Fib time zone, you come from your high to your low, right? Or you can go to this low here first. Okay. Now, as you can see, she's already climbed. Am I lined right up here? Not really. There. Perfect. Okay, as you can see, she kind of dipped down for the retracement on this line, and then she head back up. And if you look over here, she dipped up for the retracement and come back down, right? We see a harmonic here. There's a harmonic for the sell, and there's our entry here for the buy, right? Now, with these time zones, it's just giving you a candle precisely to really get in on. The next one is right here, right? It's over here. So this market might continue sideways this way, or continue like this, right? And then we might see a sell over here somewhere, right? For retracement. Now, our MAs, I'm gonna delete this time here. Okay. I'm gonna show you a little bit more. So as you can see right here, we had to cross here for the sell as well. And you get a cross to come back up, right? There's also a cross here for the sell. There's a cross right here for the buy. These crosses happen so frequently that you can make a lot of money in these markets, right? These MAs are a serious game changer. Now, what else were we covering? Let's just double check here. Expansions and contractions. Okay. So when it comes to expansions and contractions, we see this market here on the 4 hour, right? So This is perfect here. This is perfect. So we have this contraction here, right? We have this contraction here. This whole contraction phase here. Oops. I don't want that big though. There we go. It's perfect. Okay. And then we have our expansion, right? Let's move this over a tiny bit more. We have our expansion. Oops. We have our expansion. Let's change the color there on this one. Go blue. We have our contraction, our expansion. Then we have another contraction, smaller one, but it is still a contraction. Let's change the color to red or to green or yellow. Then we have another expansion. Change the color to blue again. And then we have sideways again. Our contraction. And then we have our expansion again. See how much easier it is to just draw them in like this. It's just easier to box things in when you're trying to find things, right? And then we have our contraction cycle again, right? Let's bring this down in a bit. Go. And then, like I said, our contraction again. Which we'll be breaking out of here shortly. Looks like. Turn that yellow. All right. Let's go up to the day so you can actually see this better all together here. See, we just did the end here. So we have our contraction, our extraction, our extension, contraction, extension, contraction, extension, contraction, and extension and contraction. That's how it works here. These are the phases of the markets, right? So I can even pull this back more over to here. But these are the phases of the market. We have 4 phases here, right? There's 4 different phases here. And that's what it looks like. You box it in, it's easier to find your patterns. It's easier to find your positions. It's just much easier all in all to really understand these markets specifically. You can even do it with your indicators down here, box them in, right? Define certain things. So that's contractions and extensions. What else are we talking about? Pullbacks. Okay, pullbacks. Okay. So let's erase this one. I'm going to show you here. Okay. So I only erased that one because I want to show you how we have this extension here, right? Then we have it pull back right here. I'm going to measure this this out with the fib so you can actually see what I'm talking about here. So come from this bottom to this high here, okay? Come from this bottom to this high. Now, as you can see, we have the entry here off of the 50, and we have it shoot right up, and come back, and it pulled back to the 382, telling us, okay, you can get back into this market. This is the second best entry, right? Then we had an impulse again, and then another pullback to the 236 level, right? These are pullbacks within this impulse, okay? So we have a 1, 2, 3, 4, 5 impulse wave, right? Right here. 1, 2, 3, 4, 5, right? Impulse wave. And as you can see, it also bounced off of the 50 line here. Our pullbacks were to the 50. Can you see that, right? Notice that. That's exactly what we're looking for here. And you can also see it on this side, on this declining side as well, right? Notice that the market plays off of this 50 quite a bit, okay? So that's our pullbacks. What else should we be talking about here? Important extension levels, and that's these guys here. That's these rejections here almost. Okay, so let's go back over here. So important extensions. So our extensions are in our impulses, right? So if you look, let's erase this this thing here. Okay. So if we go from this one, we'll 1, 2, 3, 4, 5. Okay, so let's do that, and then we'll find what we're looking for here. So 1, 2, 3, 4, 5. All right, we'll go here because it's kind of going sideways on the other one. So, all right. Now, as you can see, our extension, our important extension level, if you can see right here, this 618 is the important extension on this wave here. Okay. We have this 618 retest pullback off of this 50. Okay. To get back in to take this trade up to the third level. Okay. Of this impulse. Now, this is the important extension right here. This area here is your important area, okay? And it works the same way going in a declining market. you're looking for the important extension areas. And usually it bases it off of these fib retracements. Okay. It's based off of these positions of these fibs and your time analysis, majority of the time. So if we did this and we took, let's take our time and put our time on here. So we'll go the same. We'll go from low to high here. We'll just measure this wave here. This wave here, right? So that gives us all of this area. As you can see, you have an entry right here. Take a small entry, right? Or you can wait for it to come up to this level here and get into the market to take this right back down to this area here, right? We don't need the time in there, so I'm going to the time out. Just wanted to show you that specifically. So what else were we showing here? So we covered moving averages, how to dictate the movements. We covered expansions, fib retracements, pullbacks. We covered important retracements and important extensions. So that really ties up the lesson for this week. Let's go into the doc here. The goal is to really not lose your money when you're trading, right? So you're going to be playing off of profits specifically. The goal of a successful trader is to make the best trades, okay? Money is secondary. You're not in these markets to chase the money, okay? Money doesn't like to be chased. It doesn't respond very nicely if you chase it, okay? It draws in more situations where you're in lack of, right? Because you're in that vibration, oh, I need money. And it's just going to bring in more, oh, I need money situations, okay? So just be aware of how you're setting up your trades, the vibration you're in, the environment that you're allowing yourself to trade in, and the overall outlook of everything when it comes to setting up the trade itself. Okay. So lesson 12, understanding the financial markets. Everything you have up to this point is essential to understanding these markets. Okay, your SRTs, fibs, and your moving averages. To allow the process of training your eyes to unfold, you must be willing to dedicate 1 hour a day to looking at these algorithms, okay? This will bring you to the expert level if you stay committed, okay? Now, we all have busy lives and schedules that we can do, right? But there's always time where we're home and not doing anything, right? In those times where we're not doing anything, maybe vegging on the couch, watching Netflix or TV, we could be looking at a chart and learning how to put our money to work for us, right? Those times are essential to learning a new skill. If you want to get to a different level in your finances, or if you just want to get to a goal to help free up more time in your daily life, right? So this is some of the things that I gave you guys this week for homework. How to place your first trade if you haven't yet, okay? It's going to show you how to go about that in this live training. Also, the understanding of smart money concepts, okay? This is huge for you, okay? This is huge. I don't know why it's not pulling up, but I guess this video is not available. I don't know why it's not available. All right. I'm gonna have to go to my folder and find something. Okay, so let me go into risk management here, the importance of risk management and trading in the zone. This is a great book to give you that edge in understanding how to trade properly and proficiently and also profitably, right? Because if we aren't making money and we're losing it all the time, you're going to end up quitting, right? You're going to end up quitting on yourself. And in order to really learn this type of skill set, it's not a get rich skill. It's a get rich forever skill set. Okay. So trust the process. 6 to 8 months down the road, you're going to be in a different spot, a different vibration, and a way better position for trading. Okay. So give yourself some time because that's where it's going to be for you, right? That's where it was for me. I had to allow that process to unfold because there's so much to learn when understanding trading, right? It really starts with yourself. It starts with understanding who you are and where your mindset is, right? Because if your mindset's in a different place, a different vibration, in a negative setting environment, you're going to attract more negative situations when it comes to trading, right? You're not going to find the right setups. You may find a setup, but it's going to take you to stop loss, right? So vibration is everything. And when we move through it with our actions, that's when we set up that equal and opposite reaction, right? And we get the reward that we're looking for. So just put the effort forward, train your eyes daily, and you'll become the master. So I hope you enjoyed this lesson. And I'm excited to really hear what everything is going to be for you when you really decide to really take this and move forward. Okay. So reach out if you have any questions this week alone. Give yourself that time, that place, and that vibration to really take that skill set to the next level. Okay. I want to thank you guys for jumping on, and it's my privilege to really bring this information to you guys because it is you that really make it possible, right? So enjoy your Saturday and go out and dominate. Namaste.